So you just got $100,000. Maybe it's an inheritance, maybe you sold a property, or you just got a big bonus and you're staring down two doors. Door number one, you put it into your mortgage. You save $600 a month, maybe $115,000 in interest. It's safe, predictable, might be kind of boring. Or you've got door option number two, you invest it. Let's say you earn $665,000 over a 28-year period. There is market risk and you have zero cash flow relief today. And by the way, the worst thing you could do is let it sit in a checking account earning 0% interest and just letting it do nothing. Most people overthink this decision. They ask Reddit, they ask their friends, they get 20 different opinions. Here's the truth, both decisions can be right and both can be wrong. Most people are gonna ask which has a better return, and that might be the wrong question. The right question might be, do I want more cash flow flexibility today or maximum potential wealth creation in the future? And those are really two different problems. If you're stressed out about your monthly payment, your income's lumpy, you're tight on a monthly basis, cash flow today might be more important. And if your payment's comfortable and you're thinking long-term, well, locking money into your home might not be the best fit. I'm not here to share with you to always invest or pay down your debt. Let me walk you through the math. So here are the numbers we're going to use. A mortgage balance of $500,000. We're just going to use an estimated interest rate of 6%, a conventional 30-year fixed, and let's just say that you've got 28 years left of your mortgage. Your numbers might be slightly different, and this logic will hold, so just bear with me. Okay, so let's go back to the two doors. Door number one, a mortgage recast. You might be thinking, hey John, what is a mortgage recast? A mortgage recast is you simply apply a larger sum towards your principal, and the mortgage servicer, the one that's managing the mortgage, they readjust your monthly payment and mortgage balance. So what stays the same? Your interest rate stays the same. The time period or the amortization, if you're 28 years into it, you don't go back to 30 years. You stay at the 28 years. So basically, you're not restarting the mortgage. There's no refinance, no appraisal done. You're not going through all the paperwork, and there's no credit check. The only thing that changes is your balance and your monthly payment. You might be thinking, well, John, what's the cost to do a recast? It depends on your servicer, but it's very nominal. It could be $250 or $500, somewhere in that vicinity, and it's one time. Important notes, recast are only available on certain types of mortgages. Usually it's a conventional or a jumbo. Also, check with your mortgage servicer because most will have a minimum lump sum payment. It could be $5,000, $10,000, or $15,000. So it's really important to call your servicer to get that information. By the way, I'm John Farrell. I've been lending for 26 years. If you would do me a huge favor, like, subscribe to my video. I'll be doing these on a weekly basis. And you know what? I'm always getting better, but I'm here to serve you and help educate you. Here's the real recast math. You've got $500,000 and you've got a principal and interest payment of $29.98. And remember, you've got that $100,000 that you're going to apply towards the balance. So after your balance is $400,000, and because you've applied that $100,000, your new monthly payment is $23.98. Remember, that's principal and interest, does not include taxes or insurance. So now your payments drop $600 a month, and that's about $7,200 per year, which is a good amount of breathing room each year going forward. One important clarification, the additional $600, it's not extra profit, it's a cash flow shift. Really simple, it's money staying in your pocket, not going to the bank. That additional $115,000, it's just really interest that you're no longer paying. You might be saying, well, why do people choose recasting? The first thing is predictability. Roughly that's 6% risk-free avoidance on interest. And it gives you immediate breathing room. $600 savings per month it's a big deal. I mean, who doesn't want to have $7,200 in fixed lower expenses? And the other thing with recast is simplicity. There's no credit check. You don't have to go through the mundane process of refinancing that can take weeks. It just really gives you a peace of mind. You $100,000 less and the payments, they feel better. But here's what you give up, liquidity. That $100,000, it's locked into your home now. And besides liquidity, you also give up a little bit of opportunity. That money, it's not available to compound anywhere else. Which brings us to door number two. Option number two, investing the $100,000. You'll hear people saying, I have friends that say this all the time, just invest in the S&P 500. It's averaging 10, 11% over the last 20 years. And you can pull it up, that's historically true. But in this example, I'm not gonna use that number because I wanna be a little more conservative because there is market volatility. And most people, all their investments aren't 100% in stocks. More are gonna have diversified portfolios because it's a smarter play and the returns can be less. So for this comparison, I'm gonna use a 7% return over a 28-year period. And I think that's more realistic for a disciplined, diversified investor. All right, here's the investment math. So again, we're going back to the $100,000. You've got $100,000 that you invested. You're earning a 7% return annually over a 28-year period. So the result of that example investment would be $664,000 and change. And of course, this is just a planning illustration. This is not a promise, but I do believe it has some meaningful wealth. Here's the trade-off. Markets, and I'm talking stocks, equities, bonds, they will drop at some point, and you really want to be disciplined. But choosing this door, understand you get zero payment relief today. Your mortgage payment, it will stay at $29.98. So door number one, you have a recast, you save $115,000 over a 28-year period, your payment drops $600. Or door number two, you invest, it potentially earns $664,000 over that same 28-year period. But again, with volatility. So you might be asking yourself, so why do people choose investing? Well, first and foremost, it does have a higher upside. You're saving for retirement, maybe your kid's college, and this really can create generational wealth. You also have liquidity. You have access to that cash. Of course, there's going to be tax implications depending on when you pull it out. And investments, they allow for flexibility. You can pivot, rebalance, adjust over time. And here's some cons that come with investing. You've got market volatility. It comes with a lot of discipline. You've got to be disciplined. And you don't get that instant, immediate cash flow relief. So when you're looking at door one and door two side by side, this isn't like a good versus bad. It's really just certainty versus opportunity. Do I want that cash flow today or the wealth tomorrow? And one more thing that people miss, paying down a 6% mortgage is like earning a risk-free 6% return. And it's typically not taxed the way investments can be. So for you, I think the big question is, do you want to be richer on paper or sleep better every month? Lowering your mortgage payment, it changes your life now. And investing, it could change your life decades from now. Both are valid, right? And they solve different problems. Cash flow buys time, and time buys better decisions. So for many families, the better decision might be utilizing both doors. Again, you came into that $100,000, so let's assume that you recast $50,000 and invest $50,000. By taking the $50,000 and doing the recast, you save $300 on your mortgage payment. Instant monthly drop. Then you invest the $50,000, and then with the other $50,000, you invest it. You've got that long-term compounding and liquidity, it's preserved. And here's the cool thing. You take that $300 that you saved on the recast, and when months aren't as tight, reinvest it into your portfolio. And here's the aha moment. This gives you certainty and upside. So ask yourself, are you really stressed out about this monthly payment? Could it be a recast and a hybrid? Another thing, how do I react when the market drops, the stock market, by 30%? Am I going to be stressed out? Is it going to be too much stress? Can I handle that? It's kind of like panic. Maybe recast is better. Or am I more disciplined? Maybe the investing's better. What do I value more right now? Is it margin or growth? And here's the cool thing. There's no wrong answer. There's just a wrong fit. So it really depends on you. Investing, it's not good or bad. Big mistake is choosing without the understanding of the trade-offs. Recast $100,000, you save estimated $115,000 in interest, and your payment drops $600 per month, and you have zero market risk. Or invest $100,000, $664,000 potential over a 7-year period, but does come with market risk. Or could the answer be, maybe I do a hybrid and do both? So don't optimize for a spreadsheet, optimize for the life that you're actually living. By the way, if you want help running the actual numbers, I'm happy to help. There's no cost, no pressure, just gives you clarity. And last, if you like this video and added some insight and value, hit like, subscribe. I'd really appreciate it.